Today we need to discuss the challenges that Europe is currently facing with regards to their energy prices and inflation. It's been what seems like years, and yet the problems have not subsided. They made some big mistakes, and I'm going to talk about that today. The situation is having a real impact on households and industries in the region. People are finding it harder to make ends meet as the prices for energy and goods keep going up. This inflation, quite frankly, hasn't subsided as they told us it would. Christine Lagarde said in 2022, inflation is going to go down and you're not going to have it be a problem. But here we are. Not only that, there are potential for disruptions to the energy supply chain. This means that businesses could have trouble getting the energy that they need to operate, and it could increase the cost for customers and businesses alike. You got to realize that these businesses, if they're trying to heat the business, if they're trying to produce food and all kinds of things, they need a lot of energy. And if those prices go up, they put that on you. All of this could create headwinds for economic growth. And if businesses can't operate efficiently and people can't afford to buy things, well, then of course the economy will suffer. The ECB, what are they going to do about it? Well, they're under a lot of pressure, that's for sure, because they need to balance their supposed mandate to fight inflation with the need to support economic recovery. They don't want to generate too much inflation. They've already printed so much money. They've already bought all the corporate bonds of all these companies. And so here they are. The ECB's response, which could include the possibility of raising interest rates even further, which would be closely watched by markets and policymakers alike. See, they don't want to increase too far because then that's too restrictive, and then the markets start to fall, right? Businesses won't like that. They might start laying off too many people. So they got to balance that. And that's because it could have a big impact on the economy and our lives. And that is really what's occurring right now. I want to bring all of that to you in this video today, including some information about why, despite all the bans, the sanctions, and everything that's happened in Russia, they are still producing the oil that's going to Germany. Okay, more of that in here. First, beginning with British households facing higher energy bills despite a lower price cap. This is not subsiding. This is not going away. And here we are today still talking about it. I feel like I've been talking about this forever. Households still face higher costs as subsidy level rises. So there's more in there, but I think I made my point. Demand for oil is expected to hit record levels in the second half of the year. The prospect of higher prices in the second half of the year in the sort of the $90 to $100 range is a real possibility. It wouldn't take much, right? To get it to from where we are today, another $10, $20, we're up to those levels. They're talking about, getting rid of hydrocarbons. We need to get rid of this. This is not the future, so we got to invest in green energy and all that, which is great, of course, but there's just one problem, and that is it's simply not ready. Now, China is, as they say, their record consumption. They are going to need more and more resources in this year 2023 and beyond. So that puts additional pressure on all the suppliers, on the refiners and so on. That pushes the prices up. Now, it all depends on what happens with China. I just did a video about this just recently. If you haven't seen it, highly recommend it. Only a few people have seen it. And it's one of those that really breaks down why we are seeing what we are seeing, in the demand potential, businesses, investment that you could be making are all discussed in that video about China. So definitely check it out if you can, okay? Just looking at this, I think it's important to show us that, quite frankly, what's happening in China is also going to be apparent with the whole Russian sanctions and so on, because a lot of times they're taking the Russian crude and they're packaging it up and then they're just sending it off. This is what happens. And I'll talk to you about another aspect of that as well today, where we're being told in one respect that, oh, we're sanctioning them and doing all this, but really it's all just for show. Euro area's core inflation problem to come to the fore. China's PMIs to provide clues on the success of the economy's reopening, as well as Brazil's GDP set to show the first quarterly contraction since 2021. All of these globally happening at the same time, where China is going what seems like in the reverse of the rest of the world. They were printing when the world was tightening. They're tightening when the world is printing, and they're doing something very different. However, you look at other places, as they mentioned here, particularly in Europe, they're in the worst position possible. And I think it's going to be worse than what we saw in 2011, 2012 for Europe, because this can't really be fixed. They had become so dependent on Russian energy, and it was said that, oh, it'd be ridiculous that we have to worry about this. Haha, this is so funny. We're getting cheap Russian oil, and we don't need to worry about it. Now we worry about it. The prices are so elevated, even still today. They've come down, but they're still elevated, and people have to pay a higher price for that. So the government's stepping in, and they're putting price caps and so on. But what does that really do? Well, that means that you, the taxpayer, have to foot that bill. The problem hasn't been resolved. And so that's what we're dealing with here. So sure, the inflation hasn't come down. I'll show you another example of that in this video today. But it should be noted here that for a lot of people, they are not going to resolve this issue. They are going to pay more. And then what is the eventual solution that's provided? Oh, I think I know. And that is a universal basic income. And more on that in another video coming up, where people are going to get $1,000 just for being them. If you want to know about that, hit that subscribe button down below. Germany's Kazakh oil deal won't release Russia's grip. What? Wait a minute. What? What are you talking about? Well, as long as crude shipments continue to cross Russian territory, Moscow will be able to dictate the supply of fuel to Berlin. And that's what's happening. It's going on now. And we got to realize what this is all about. Look, first, the deal won't break Germany's dependence on Russian oil. So even though it's a step towards diversifying their energy sources, they're still pretty reliant on Russia. Second, Germany's energy security is still a concern. They need to do more to diversify their sources of energy. But quite frankly, they're not doing that. A lot of them are starting to. We're starting to see the talk of nuclear energy being expanded, older plants that they said they were going to be decommissioned. They're starting to reopen that. We're seeing that globally. I'm not sure what's going to happen, but we need to get other sources. If you're going to say, okay, Russia's a bad guy, we're going to put them in timeout, well, you got to have a plan. You can't just screw over your people. You need to have a plan in place. And yet they're not doing that. And then, of course, the Kazakh oil deal could strain Germany's relationship with Russia. This could be seen as a threat to Russia's energy dominance in Europe, and that might not go over well. Look, I don't know what's going to happen in this coming weeks and months, but right now, it's not going well. It really isn't. And that, if that relationship is really going to be broken long term, it's not as if, okay, the war is over now, let's sign a couple deals, let's get back to business. If it's not that, Europe is in big trouble. I don't know how to say it in any other words. This is really, truly something that people should be paying attention to. And that's why I bring it up right here and now. Russian oil pipeline monopoly Transneft said that on Monday that it has started pumping oil from Kazakhstan to Germany via Poland through the Druzhba pipeline while halting deliveries to Poland. There are so many things, so many moving parts that are going on right now between Russia and Europe. And I'm just showing you that Poland is one country that is right at the front of this all. This is very important to watch, and I will cover more about it as there's more details coming up. But look at the prices that people are paying. Poland using a lot of coal, from my understanding. And so, their dependence here, where are they getting this from? I believe I showed that in a chart in previous videos. You've got to be careful what you do in the actions that you take because it has repercussions, and we are seeing that now today. UK oil and gas industry warns windfall tax will hurt the energy security. Whatever they try to do, they're never going to be able to actually make it beneficial for the people. This is always a joke. We're gonna tax this, we're gonna tax that, we're gonna tax the tech companies, we're gonna tax the financial transactions, and what happens? You pay more tax. You end up paying the tax. They don't end up paying the tax. I mean, it's unbelievable. Spain's inflation resumes an upward trend, rises to 6.1%. How many times have I said a second wave of inflation. I was called names, I was this and that, but here we are. Second wave of inflation is something that we need to pay attention to, of course, because that means where are we right now with the inflation rates and interest rates. Okay, here we are. Let's just say Fed funds rate, it's nearing 5%. That's where they said it was going to end. And so if they have to then deal with more inflation on top of where we are today, it can't stay at 5. It has to go to 5.25, 5.5, maybe even 6, maybe even higher, depending how many waves of inflation we get and how hard that inflation hits. So you see, this is what I've been discussing. This is the takeaway. You watch what happens with the second wave of inflation. Is that going to come? Where is it going to come from? Is it something that can easily subside, or is it something that is kind of permanent and entrenched? And that's going to tell us. Do you want to know about those details? Well, you have to subscribe. This channel is the one that gets into the nitty-gritty of all these details so that you can make the best investment choices as well as balance your own personal circumstances. So that's kind of the takeaway for this, is that we have to watch what happens with the inflation numbers so that we can see how this is going to directly impact not just the markets, but of course the job situation, the economy as a whole. All right. Sweden's GDP shrinks more than expected on the cusp of a recession. Shouldn't be a surprise to anybody that this is happening. It's not just Sweden. It's not just UK. That's not what it is. But you could see that it's going on right now, as well as I just found this one, so I wanted to include it. Sweden is ditching cash. Just wait for the fallout. Switching to digital money risks shutting out some of the most vulnerable members of society. They don't want to do this. Should we do this? Look, the businesses are going to dictate that because they're going to say, I don't want to have cash in my store. It's dangerous. There's the increase in crime and so on. I don't want cash. So we're not going to do that. So this is the way that it's going to go, and it's not going to be based on the consumer. It's going to be based on the business's decision. That's the way I see it. This is what's important right now. Europe is in the worst position. If you're in Europe, you've got to diversify where your income is coming from. If you're reliant on one country in Europe, at least diversify within Europe. If you can do globally, do globally. This is something important. That's why I teach about e-commerce. I've learned about e-commerce myself, and that has been important because it allows me to geographically diversify my income as well as currency diversification. That all really key stuff. I hope you appreciated this. If you did, don't forget to subscribe to the channel where each and every day I bring you the latest and greatest information. I'll see you tomorrow. Take care.